Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Hydrogen continues to be a hot topic on the market, and there's a lot of potential growth for the handful of companies who are providing hydrogen services. So, fuel cells, electrolyzers, there's all kinds of different products that could be real growth markets as the energy industry starts to use more hydrogen. But where should investors be looking? That's what I want to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, below. I'll leave a link to that in the show notes. And with hydrogen stocks, I want to start with a chart to sort of put in context what you're paying for with these companies. And the three I'm going to focus on here are Bloom Energy, Plug Power, and Ballard Power Systems. You can see here that Plug Power is by far the most valuable company, the biggest market cap company at about $6 billion market cap. Bloom Energy, $3.5 billion market cap, and Ballard Power Systems, about $1.4 billion market cap. That's sort of the context. That's what we're paying for as investors. But what are we getting out as a result? Revenue, the order changes here. Bloom is actually generating the most revenue out of these three companies. Plug Power, second most, and Ballard Power Systems not generating a lot of revenue at all. So from a valuation standpoint, just looking at price to sales ratio, Bloom is clearly the least expensive stock, and it's showing significant growth, whereas Plug and Ballard are significantly more expensive. What happens if we look at gross profits? So how much of that revenue are you able to actually turn into a profit to pay operating expenses and ultimately eventually investors? Well, again, Bloom Energy is the only company generating a profit from their sales. Gross profit is positive, $175 million. Ballard Power Systems is second here, losing about $18 million. And Plug Power burning hundreds of millions of dollars a year, losing money on everything that they sell. I want to really highlight that because having negative gross profit for a company that is decades old at this point is really not a great sign. If you look at operating income, the trend is similar. Given its larger size, it makes sense that Bloom is spending more money on operations. So that's why the operating loss is bigger. But again, Bloom is generating far more revenue. So take those top two with a little bit of a grain of salt. But again, with Plug Power, we see that just burning hundreds of millions of dollars from operations each year. Net income is going to be a similar story to what we just saw with operating income. Ballard Power Systems losing the least amount of money, followed by Bloom Energy and Plug Power losing by far the most. So what are some of the reasons behind that? Well, a lot of it goes down to what the company's end markets are. Both Ballard Power Systems and Plug Power have for a long time served primarily materials handling markets, basically turning electric powered forklifts into hydrogen powered forklifts, or small vehicles for airports is something that Ballard Power Systems did. But these weren't massive markets, and they were never able to translate that into a big business providing hydrogen systems for transportation vehicles, whether that's a typical passenger vehicle or whether that's a delivery truck. Those businesses just didn't take off. So that's those two companies. Bloom Energy makes a very different product, and I'll talk about the technology in just a second, but they're primarily focused on backup storage. So a hospital, for example, might have a Bloom Energy system to provide power to the entire hospital if power goes down. Over the last couple of years, both Bloom and Plug have really put a lot of emphasis on moving into the grid side of things, so producing things like electrolyzers and then turning that green hydrogen into something that's usable in stationary storage systems. So that's kind of the transition of the business, but I think it's worth talking about their different technologies. This is from the Department of Energy and talks about the different types of hydrogen fuel cell technology. And the two I'm going to focus on are polymer electrolyte membrane. This is what Ballard Power Systems and Plug Power produce. And then I'll get into solid oxide, which is what Bloom Energy is doing. The advantage of a PEM fuel cell is that it's going to be relatively low operating temperature. It's got reasonably good efficiency. It has quick startup and load time. So basically power on demand, if you will, and not a lot of corrosion. The challenge is that the catalysts are expensive and it's sensitive to impurities. The solid oxide, which is what Bloom Energy is doing, the big disadvantage is that the operating temperature is extremely high, 500 to 1000 Celsius. but you can see that a typical stack is going to be much, much bigger than a typical stack for a PEM fuel cell. This is why it makes sense for something like Bloom Energy to be providing power to a large industrial facility. So applications, auxiliary power, electric utilities, distributed generation. It just makes much more sense for this technology to be used in these things. The advantages here, higher efficiency. This has always been one of the advantages for solid oxide fuel cells. Can be flexible fuel. Bloom Energy has actually traditionally used natural gas as a fuel, so just now making the transition to cleaner fuels by both producing that fuel and consuming that fuel. And like we talked about, the challenge is that it's going to operate at a very high temperature and there's going to be corrosion and breakdown of cell components. It has a little bit longer startup time. Bloom Energy said that startup time is about 10 minutes, but it's not instant power on demand like you would get from a PEM fuel cell. So a little bit different applications there, a little bit different advantages and disadvantages. Like I said, all of these companies are moving into green hydrogen, which is hydrogen that's produced from renewable sources. Power goes in, water goes in, and hydrogen comes out. With a solid oxide fuel cell, you can basically run the system both forward and backward. So forward, you would be producing hydrogen, and backward, you would be consuming that hydrogen and producing electricity. That's one of the advantages that Bloom Energy has, and it's in the industrial space. So that's one of the reasons that I like the technology and the use case there. But from an investment standpoint, it's pretty clear to me that Bloom Energy is far better than either of the other two companies. Particularly Plug Power has a multi-decade history of just burning cash, diluting shareholders, and management keeps promising growth, positive cash flow sometime in the future, always a few years in the future. Well, that time never actually comes. And so that's really my concern, is that management has been doing this for a very, very long time and has never actually gotten to the promised land. Bloom Energy, on the other hand, is actually generating a profit from what it's selling. And it's selling to utilities and large companies. These are companies that are really focused on how much something costs and what value they're going to get out of it. So if Bloom Energy is able to make a profit making those kinds of sales, then that tells me that they're adding enough value. Now, the challenge is going to be growing the market and reducing costs, improving efficiency, all those kinds of things that you would expect with new or emerging technologies. But I think Bloom Energy fundamentally is just ahead of these two competitors. That's why it's the one stock that I would own in the hydrogen space. Now, all of this said, all of these companies are going to be very volatile, very risky. But I think Bloom Energy is really a step ahead of the rest. What do you think about these three stocks? Leave your comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.